welcome to the SaaSy Talks. We are once again here with yet another episode, and this time we have a very special guest. This is Siddharth Shah. He's in the investment team at Malpani Ventures, and Siddharth, we are very excited to have you here. Thank you so much for coming and taking out the time because you are our first VC guest, and it couldn't get any more crazy, I suppose, with the kind of insights that we are going to get, especially the any young founders, any entrepreneurs that will be watching here would be really interested in understanding the investor side of the story, and that's pretty much what we are going to be talking about today. But before that, Siddharth, we're going to start off by from you, Siddharth, the person. How has this journey been? I saw your LinkedIn. We've met before a couple of times. You've been in this portfolio in the private equity or the VC space for some time now. How
Yes.
did this come across? Like, how did you think about going entering this line? And yeah,
So interestingly, firstly, thank you for having me here. I know it took some time for us to get to this podcast recording, but thank you for your patience and waiting for me. Uh, for me, I just wrote about this, a couple of days ago that why am I an investor, right? And I ask myself this a lot of times. The only answer I can imagine is that because this is the only thing I know how to do, right? And stereotypes do apply because I am a Gujarati. I've been looking at businesses and investing and stock markets and all of this since a very young age.
yeah, absolutely.
And lastly, which I figured out is that I really want to play long term games.
Hmm.
I don't want to, be in a space where I'm doing something new every 2 years, 3 years or so. I want to be defined as somebody who really wants to play the long term game, be in there.
Yeah,
It's like the J curve of entrepreneurship as well,
yeah,
right? The first 4 5 years you don't see anything else, but
absolutely.
it compounds over a period of time, so you kind of get that bump in the later years.
Yeah.
So that is why I am what I am. Why am I like what am I as an investor? Why am I an investor? I think it was completely serendipity. I was doing something else earlier. I was in public markets,
Yeah.
and I did that for about a year or 2 years. I don't remember, but that is where I met Dr. Malpani,
Okay.
and I found out that there's an opening in his family office investing in early stage, and I asked, can I just do that? And both Manish, my former boss, and Dr. Malpani were grateful enough to let a person 2 years into his investing journey, having absolutely no experience of early stage venture investments or startups, just join and do what he wants to do. So that's how I've been an investor in the last 5 years.
That's wonderful. That so talk more about Dr. Malpani. You met him for the first time. I'm sure there would have been a conversation that would have not just the like they are hiring, but I think there would have been something else that would have caught your attention that you felt that yeah I should work for Malpani Ventures. Like how is he as a personality? Because obviously he's an inspirational figure for a lot of people.
So, interestingly, I only met Dr. Malpani once before I started working for him,
Uh-huh.
and that too, it was about a year before.
Uh-huh.
Right, I joined a new firm, and the tradition was every new joinee has to meet Dr. Malpani because he sat on the board of the company. He was, one of our anchor
Yeah.
investors.
Okay.
So that was the first time I met him, and his first question, I just went into his clinic
Yeah.
at Colaba, right? The first question he asked me, why aren't you carrying a book and a pen? Because there might be something important for you to note down. I said, yes, I will actually use my phone to note down important points, right? And that conversation kind of lasted for about an hour, where um, I did not expect an IVF specialist to know so much about
Right.
investing, about what it takes for the P&L, cash flows. Why should you invest in a company? Why do you want to invest in a company for long term? That was my first experience with talk, and I think I just had like a phone call before I started doing
Hmm.
early stage investments for Malpani Ventures,
Right.
where his question was very simply, what can I do to enable you,
Hmm.
right?
Hmm.
I know you are young,
Hmm.
I know you are new, you've not done this before. That doesn't really matter. What matters is intent. What matters is you do things with your heart in the right place and you work hard. So tell me, what can I do to kind of help you? And I think that has been the crux and the persona of Dr. Malpani as an investor, as an angel investor, as my principal investor effectively, is that he has a complete learning agenda.
Right.
Anytime you have a conversation with him, anytime you share a deal with him, anytime you create a note, the the first question that I will expect is, so what did you learn from this experience? What did you learn from your engagement with the founders? What did you learn new about this industry, this market, these set of customers, so on and so forth, right? And the moment we take a pause and think about this question itself,
Hmm.
right? What did you learn
Yep.
about this? It's very easy to say, you know what, this is the industry, this is what they do, this is why they'll
Yep.
succeed, and this is why we should invest. But at the end of the day, if you're not learning anything new, if you are not applying your past experiences, if you're not creating an atmosphere where you become better yourself, I think then that is the missing piece. People say, what is your
Yeah.
purpose, what is your why?
Right.
I think that kind of gives, when we are young, people don't really think about
Yeah.
purpose and what is my why and all of it. But I think as you kind of get older, as you get a bit more mature, I think that is something that you really learn from your mentors.
Absolutely. So that is wonderful. I think that is very important at at any stage to have these kind of people around you. I think this does not come naturally. I feel this is more related to the peer, and this is why thing brought a certain nostalgia for me. So I was back in college. I had this senior, and we were part of ISEC. I'm not sure if you've heard of it. Yeah,
Yes,
so
yes.
we're part of ISEC, and there the culture with ISEC was, they wanted that corporate feel to come into the college youth as well, right? So that this why was always talked about, and I used to take it very seriously. I enjoyed working with ISEC, so I took this why bit very seriously, and I used to question myself every time I do something, but it was not really clear as to what this why also basically means. What am I looking to find out? I think with time, when you meet people, when you meet such kind of people who've experienced it, I
Sorry, I
think
think I
there
lost
these kind
you,
of understandings take
Ishan.
much more better shape, and that's what's probably Dr. Malpani has done for you. Um, so
Sorry, Ishan, I may have lost you for like 10, 15
Oh,
seconds in the
okay,
middle.
okay, okay. Anyway, no problems, no problems. Let's move on from that. So great, great. So you're enjoying working with Malpani Ventures is what if
Oh, yes,
absolutely right. So
absolutely.
let's get into the crux of this podcast. Why I wanted you here, right? Let's talk about the investor point of view, right? And obviously we'll align it with how Malpani Ventures also looks at investment and funding,
Sure.
because this is very important in a founder's journey. I think investment and funding play one of the most important roles, right, in that entire journey, and it's high pressure game also for the founders, right? So as an investor, first of all, what do you look at? Like, how do you, because you invest majorly in the pre-seed and the seed area, right? And that's early stage. So you're going for that 100x return, you're going for that long-term win, right? So how do you judge, like what factors essentially are you looking at when taking that bet?
So, very pertinent question, right?
Yeah.
Why do you invest in early stage and what are you
Yeah.
looking for? Essentially, you're looking for traits and signals and validation which may point towards these companies succeeding at some point in time in the future. Very simple,
Absolutely.
but uh, how do you kind of
Hmm.
break that down, right? So how we like to think is, would I want to build this
Yeah.
business, right? This is something that
Okay.
interests me
Interesting.
in running this business for the next 8, 10 years. And if I were a founder, how would I do it? So I like to think about what is the problem statement, what problem are you solving, for whom, then that covers your
Yeah.
customers, what customers perspective about the pain points, the solution, different solutions available in the market at this
Okay.
point in time. Then try to place whether your product is in a wide space, it's solving something new, or you either need to solve something new or you need to solve
Yep.
something better,
Yep.
right? You are solving something new, then again that's a whole new set of questions. Why do you think people will want to pay today, 5 years from now, 10 years from now? If you're solving something existing but better, then why do you think people will leave legacy solutions and
Yeah.
come to you? So what is your added advantage? And then the last and the final, the most important thing is how does the founder feel about the
Hmm.
opportunity? Because while I am thinking that how would I do it if I were,
Yep.
if,
Yep.
right? But the
Actually.
founder is actually doing it. So how does the founder think about doing this for the next 5, 7,
Hmm.
10 years? Because it's not a short journey, right? Any startup, even after raising funding, takes about, I'm assuming, about 5, 7 years to
Yep.
mature, right? At least taking two business cycles, boom and a bust, to take care of the business model, fundamentals, financials, sustainability,
Yep.
all of it. So what is it? What specific insight does the founder have to give in the next 10 years? And as you know that founders typically don't get paid market salaries. Sometimes they're pumped in
Yeah.
their own money uh, to manage co-founder issues, family issues. Some people have to buy houses, all of it, right? Despite the plethora of responsibilities on top of you, if you want to do something, why are you
Hmm.
doing it? So again, that kind of ties down to your why, that you are doing something, and that ties down to how we think about the opportunity
Yep.
also.
Understood. So the founder, obviously, at the early stage, the founder is very important for you to judge, right? In that, for you to bet against an opportunity, founder becomes essentially a very important figure. So when you see a founder, right, because entrepreneurship has taken a buzz now, at least in the last 5 years, it's not just the IITians and the IIM people coming out and building businesses. It's people are business building, and I'm not talking about SaaS businesses only right now, right? Um, People have started,
Correct, correct.
I mentioned in the earlier podcast with the founder also, like Shark Tank has actually had a very huge impact, right? Or either we've now become aware that yes, this is happening in our country, either ways, right?
Yes, yes.
It's I think both ways, right? It was existing there, but and since people are not aware that yes, it is existing, and more people have come into picture. So they obviously, these people don't belong to the prestigious colleges, right? So how do you judge that? And I am guessing, and probably I'm very sure about it, it's not just one meeting that happens, right? Do you guys take multiple meetings? Do you try to understand him as a person as well? How does he think? So what all plays in your mind, and how do you judge that?
So I think, with the exception of one or two investments made during COVID, where we
Yeah.
could not travel, we've never made an investment without meeting the
Yeah.
founding team.
Yeah.
So that's just one point, right? In fact, we meet the founders at least twice before committing to an investment. One is the team, me and my
Yeah.
colleague Dhruv. We fly out to wherever they are and meet
Hmm.
them in person. Try to spend half a day, have a meal, meet the team, all of it. And the second is we invite them over to pitch to our investment committee. So again, we kind of get to spend half a day
Hmm.
before, in person, right? Informal
Yeah.
conversations, discussions around their business, so on and so forth, before we kind of make the investment or even make the
Yeah.
commitment to invest. So that this is on, actually meeting people in person to
Yeah.
understand them, right? We've met in
Yeah.
the
Yeah.
past, right? We had one phone call, but we actually met, had a meal, spent like 2, 3 hours together to kind of get a feel of who you are as a
Agreed.
person, and that's
Yeah.
very important. I think remote is not taking over human
Absolutely.
interaction
I
anymore.
completely agree.
That's one, and two is, yeah, yeah. Two is about found like about entrepreneurship becoming a bit
Hmm.
mainstream. I would say that some of our most successful companies are founders who are not from metro cities. They are
Interesting.
founders from a city in Orissa, in Bhubaneswar, who are from Pune, uh, right now some of our pipeline is filled out of founders who are sitting out of the cities in Gujarat, like Ahmedabad, Rajkot,
Yeah.
Surat, Madhya Pradesh, somewhere in Bhopal, somewhere in Indore, right? So I think entrepreneurship is becoming a bit more distributed,
Yeah.
democratized in a way. Of course, Shark Tank, for everything that is good
Yeah.
and bad, has definitely brought a layer of
Yeah.
access, right, of visibility, of the nudge that uh, prospective founders had to give their families before
Yeah.
starting out, right? I think that has kind of that friction has kind
Agreed.
of
Hmm.
become less. And at the end of the day, it doesn't matter whether you're from IIT, IIM, or any other college, as long as if you have your fundamentals in place, you're solving the right problem. There's a big market. Your heart is in the right place. You actually want to solve for customers rather than for funding or investments or lifestyle. What is stopping you from creating a big business, right? You may not make it in 3 years, but you
Yeah.
may make it in 5 years. So that is something that I think we all need to kind of ensure.
That's interesting. That's actually very nice to hear also. Two things from what you just mentioned, right? One is something that again trying to get an insight. You travel a lot. You go to these early stage founders, right? And probably the hit rate is also very less. So you know that out of the 10 people you're flying out to, spending time and putting in that effort, going to a different city, you know that out of these 10 probably you'll end up investing in one or probably sometimes none out of it, right? uh,
Fair,
do
yes.
other such VC firms also do this? Do they also want to meet the founders in person, or that this is something that you guys have picked up and you feel that this is very important?
So, two
Hmm.
parts to this question, right? One is because we are
Yeah.
in Mumbai, and let's say we two-thirds of startups, the venture-backed startups or venture-backable startups,
Yeah.
whatever you call it, are operating out of
Yep.
in and around Bangalore, right? That is a distinct reason why we have to go and fly out and meet these people, right? Um, so that's one. Two is I would like to think even before COVID, after COVID, during COVID, founders were meeting investors left, right, center. It's not as if every deal is just
Yeah.
happening through Zoom. Maybe there was a very small time during COVID that deal making accelerated, became more quicker because people wanted to deploy capital. But most people I speak to are actually going out and meeting
Understood.
others, whether it is other investors wherever they are, and whether it is founders, they are meeting people to make these deals. So I don't think it is
Okay.
specific to us. Maybe what is specific to us is that we want to spend like more time with people rather than just having like a 1 hour coffee
Understood.
meeting.
Understood. Amazing. Okay. So, the second thing you talked about, and this will take us to the next phase of the podcast as well. You just talked about, investing in a lot of startups that do not come from these metro cities, right? Could you take us through any interesting investment that you guys made? Again, not necessarily SaaS right now. We're going to come to SaaS in a bit. But yeah, what was so interesting about it? Because I'm guessing uh, the most interesting stories will come from these cities, right? The metro cities are probably like a
Yes.
cliche in this kind of a journey. So these cities is something people get excited about as well. Okay, someone from an Odisha, right, is building a startup and doing it well, right? So anything around that, any story that you remember?
So I think one of our earlier investments, this will predate my joining the company too, right? The company is called
Okay.
Video Cipher. They are like two batchmates from
Okay.
IIT Delhi. One is from Jaipur and one is from Bhubaneswar. They met in IIT. I think in the final year
Hmm.
of their college, they said, you know what, let's do something. Everybody around is watching
Yeah.
pirated movies. Let's solve for
Okay.
video
Interesting.
piracy, because this is a big problem that
Interesting.
affects a
Yeah.
lot of people. Uh, so much so that one of the co-founders left uh, IIT Delhi in
Oh
his
my
final
God.
semester. He said, "You know what? This is what I've found. This is my calling. I'm kind of getting distracted with studies. Why don't I put in my all in building this business?" Right? People think it may be foolish, right? But the business is now doing upwards of $3 million in
Amazing.
revenue, and I think they've raised not more than half a
Amazing.
million in
Amazing.
funding in all. They've been profitable for the past 4 5 years. Their team sizes is not small. They have a
Okay.
team of 30 35 people. So it's not that just people from these big fancy metros can do
Mhm.
this. Anybody can do it. Is what we feel. As long as you have an understanding of the problem, you have a right solution, you're lean and frugal. I think that's something. Uh, these are founders we look up to.
Interesting. This is
Effectively.
amazing. I mean, but yeah, I'm going to be expecting a lot of young people watching this podcast later on. So I would want to, once again go through what this founder does and want to take your personal opinion as well, like a personal opinion, literally. Um, Leaving at in the last semester of a college.
Yes, kids stay at school
Because I think,
because
yeah,
founding a
yeah,
business is such an outlier thing, right? Success does not. I mean, you can follow the process, but success is dependent
exactly,
on so many other factors. Uh,
yeah,
let's say if it did not work out, you would
exactly,
want to
yeah,
have some sort of a backup, right? And having the name of
college,
a prestigious college like IIT Delhi
absolutely.
kind of adds so much to
And considering what
to your
what kind of
profile.
effort you've already put to get into that college, you've put in almost at least
Oh
two
yes,
years, and
yes.
probably now the students start putting in more years. Get it. It's
Maybe more. Now people start
exactly.
when they are in what seventh, eighth standard and go on with
That's right. That's right.
whenever they
So
give
that
the
I think
exams.
that is also very
Yeah.
important. Like as you mentioned, it's an outlier, right? You cannot replicate this story. You cannot just follow your story, founder not going to college and think
Yes.
that if I want to be a founder, I don't have to drop out of college. It does not happen with everyone. It's a very, very small percentage.
I think
Um,
the most successful founders have
yeah,
are the most
yeah,
highly educated is what we've seen. The stories that we see, they sell because of the hooks that he's a first 18-year-old dropout, 19-year-old dropout building things. But the marginal founder who's successful, who's building out these
exactly,
companies which make
exactly.
100 million, 200 million of revenue, they are very highly educated, very well networked, and
Absolutely. I think
that's a stepping
the
stone for them.
judgment of a successful founder or a organization cannot be decided when they start off, right? In a couple of years, you cannot say, "Oh, they've done really well." You need to survive for
Yes,
another decade or more, and even more, in order to prove that you actually build a solid business, right? Um, you
yes,
know,
yes.
uh, Fads, the term that comes in, couple of years you could do really well and then vanish away and people won't remember you. And you got all the praise in those 2 years, but probably you will not a successful businessman at that, right? So that's very important. So
Very,
coming to this,
very fair.
so you guys invest, right? So has there been any story, any investment where there were clashes internally probably and people had initial doubts, but eventually it's turned out to be a good investment, something like that? Has it ever happened? And how do you tackle these kind of doubts that come in? Because again, the judgment is not a single person judgment, right? You have Dhruv, and I'm sure there's as you mentioned, the founders present to the investment board as well. So there are multiple people involved, and obviously you can expect the opinions not to match every time, right? So how does that play inside a venture firm?
So, more than a venture firm,
Yeah,
I would like to talk about
absolutely,
how we operate, because I
absolutely,
have I
absolutely,
have
please.
a inside view of how we do things, right. So, um, I think after every call that we have with founders, or every meeting, or every piece of information shared, there is this informal chat that Dhruv and I have about what did you understand? Did you like if they're doing this? Uh,
Hmm.
how would you do things differently? Why? Like, firstly, why would you do
Yeah.
things differently? Because A, you are not a founder yourself. That guy is in the
Hmm.
market. He knows some of these things which he's doing, and
Yeah.
try to understand the logic behind what these guys are doing. The second is that we have, I think this is again come from Dr. Malpani, is that we have the devil's advocate concept. And every time we are tremendously optimistic about a deal, it's kind of our duty to say, sit down, and one
Yeah.
person has to say why not, why are uh, why are you so optimistic about it?
Hmm.
Let's find reasons not to be. And if you find reasons not to be, then it just
Yeah.
makes your judgment so much more
Hmm.
better, right? Then yeah, let's go ahead, maybe double down, right? So that's one concept that we have. And lastly, our investment committee is, I mean, it's not just a committee, right? It's again a very informal discussion among people, where it is formed by Dr. Malpani, Manish Gupta, who is the founder of Solidarity. It's a public equity fund where I used to work earlier, and two key principles of that fund, where they completely look at public
Hmm.
equities,
Hmm. Hmm.
about mature, stable businesses. Dhruv and I, we look at very early stage businesses. Manish, who has private equity experience working at Rakesh Jhunjhunwala's family office in the past, and then it has Dr. Malpani, right? So all of these we come across the table, and then we have this discussion and debate where some people say, why are you
Yeah.
even looking at this company, because there's nothing to look at. Ever since we started doing pre-seed investments where companies don't even have revenue, sometimes the question is, what am I looking at, right? So then it is again a judgment call, whether you look at founders, you make a decision where
Yeah.
we do ref calls of founders, we talk to customers to understand why would they look at something, why would they not look at something, what are features that you are looking for in the product, and then that's
Hmm.
kind of ideas get bounced off each other. So I would say we're not like the like the like a VC shop where everybody just makes VC investments, so
I think
they know what to look at, why to look
that
at,
becomes more
what are
of a
things which tick
math
each other.
process, right? Rather than a subjective, qualitative analysis. I think, especially with bigger investments, at a later stage, I think it's more about that math rather than understanding it.
Yes. So are sometimes we the questions that we face is, how do you assess what
Exactly.
will be
Yeah.
the
Yeah.
revenue in year five? I'm like, I don't even know, because sometimes in a year or so the
Right.
companies may pivot, may have a new
Right.
business line, or they may not cease to exist, right? Or they may have merger and acquisition going on, they are acquired by somebody else.
Hmm.
I don't know what the future looks like 5 years from now, but in 2 years this is their
Yeah.
roadmap and this is how they'll achieve it, right? Public equity investors are wired to look at what are things looking like in 3 years, 5 years, 10 years. I say I have no idea. I have to reasonably believe that the founder that we are backing wants
Right.
to do this for 3, 5,
Right,
10 years,
right.
and
So
then
I
we
think
work the way up.
again the founder becomes very important in early stage startups, and how he presents himself and what he
Yes.
wants to do and why he wants to do becomes very, very important to grab that attention, because at the end of the day, you guys are also human beings, right? So so it's there's nothing rocket
Yep.
science about it. It's just that eagerness needs to be shown, and some sensible decisions or some sensible plans need to be put on the table for you guys to really believe in that. Awesome. So so this is what I was expecting. I'm sure, like, 4 or 5 people sitting there, with different even though in the same genre, but different kind of experiences. As you mentioned, a lot of pre-seed kind of investment companies come in. I'm sure people will say, oh, this makes no sense, right? Probably, especially if they're building something new and not something better, right? That becomes even more difficult to assess, basically. Yeah, interesting. So let's talk about SaaS, and I think that's
Yes.
that's where we met also, I think you guys started looking at SaaS. You'd already started doing investment, but I think you started looking SaaS as a important sector for you, right? And you can correct me if I'm wrong. But that's when we met, and you wanted to get some insights about the SaaS industry and growth aspects of it, right? Right. So why SaaS? Like, how
Right.
did that come into picture? Was it something that, again, you guys were sitting, you had a discussion. Obviously, the market looks amazing, right, comparatively. But yeah, so any did you guys make any random investment that was also SaaS, and you felt that okay, this is a direction that we should take, or it was a long thought of decision?
So we always wanted to make technology
Yeah,
investments, right? But earlier we were kind of sector agnostic. So we were looking at all sorts of deals, left, right, and center. But we kind of took a step back in towards the end of 2020 or 2021, where we had this sudden influx of a
yeah,
lot of money coming from everywhere in the world, where Tiger Global
yeah,
was announcing like a deal a week, right? Maybe more. Uh, we have finite capital
right,
as a family office. We don't have infinite capital, and we want sufficiency in the game. So we know our ticket size is anywhere between, let's say, 1 to 5 crores, and we want to have anywhere between 5 to 10% equity in a company. So the moment we kind of narrowed this down, we realized that we can't invest in
yeah,
uncapped convertible rounds, right? We don't want to invest in convertible rounds where uh, there is no semblance of what my equity will
hmm,
look like in 3 years when this round actually converts, right? So we kind of said no to all of that. Then we that is the funding round and funding perspective, right? And with that also goes away these drone tech, deep tech,
yeah,
which require a ton of capital. We are not the right people for that. We don't know the space and we don't have the capital, so that goes out. Then consumer is something that we do not understand very well, because consumer is a game where you kind of have to
right.
leave aside the sustainable economics for some time
Agreed.
and grow the brand until everybody knows it. If you don't invest in that, then there is no point in creating a consumer brand. Even today, the likes of an HUL, the likes of Britannia will be spending like
Absolutely.
a decent amount of money on advertising. Again, because of consumer characteristics, that was out of our picture for us. And then we look
Yeah,
back at some of the successes we had in the past. Most of
right.
the success we had was in B2B software. Whether it is mid-market software or enterprise software, that is the that those were the key areas. And as a team, we had more comfort in getting answers over the following questions, right? What problem are you solving? Why are you placed well in the ecosystem? If we want to talk to customers, can they articulate the problem? And naturally, enterprises who make money out of solving problems
Yeah,
are willing to pay top dollar to get these services. Then you and I as consumers who have a finite wallet, right?
yeah,
So again, that kind of fit with our thesis, and we said, boss, this is the only thing we understand. This is the only thing that fits into our mandate. So let's go all out and do that. So from 2021 onwards,
nice.
all we did is focus on B2B software. And in the next about 2 years or so, we've ran MVP program. It's a very short term
Okay,
program for pre-seed stage B2B SaaS companies, where we assess companies in and tell them a yes or no,
got it,
and
got it.
issue a term sheet in under 30 days. So we've done 2 programs to date, and we've crossed about, I think, collectively within that we may have looked at north of 400
Nice,
companies in pre-seed stage B2B SaaS in India, and our deal flow has
nice,
again
nice.
been pre-seed stage or seed stage B2B SaaS in India. So that's kind of that
Awesome,
network
awesome.
effect kind of flew
So,
in after about 2 years or so.
so we'll stick to SaaS now, right? So, if you guys, as you mentioned, as now investing in B2B software, right? So, can you define a few things that a founder should not do or should not present when he's looking to get funds from you specifically?
Well, uh, should not do. Don't tell us
Should we
that
do
you'll
that?
be a unicorn in 5 years or 7 years or 10 years, right? Because it's not in our hands. People
Yeah.
sometimes do that, right? It's also peer pressure because a lot of investors also
Yeah.
like to
Yeah.
show off that badge of honor that we funded 5 unicorns, right? There are some investors who
Yeah.
list their portfolio as valuation. uh, that it's
Yeah.
uh, the last 2 years people have chased that. It's okay, it happens, you have to kind of go with the flow. uh, and
Yeah.
if your company becomes a unicorn, everybody will benefit, right? You, I, everybody will. But it's not
Yeah.
possible to
Agreed.
to say that I'll become a unicorn in 5 years. It's that much more difficult. It's impractical. Rather than that,
Yeah.
show me a roadmap that you will get to like 100 million revenue in 5 years or 10 years. That's a bit more logical. And if you do that, unicorn status
Agreed.
is going to come
So
to you
no,
anyway.
so there are no specific guidelines or anything that you expect a founder to bring to the table when he's coming for a pre-seed also. So a 2 year plan is enough. Yeah.
So when we want to look at pre-seed, right? It's
Exactly.
what would we look at? We can't look at revenue because there is no revenue coming in. At times, founders are building the product, so there is no live product to look at too. What we like to look at is if you are someone building at the pre-seed stage in B2B software.
Okay.
A, do you have relevant experience in that field? uh, why is experience important?
Yeah.
Because it
Agreed.
saves so much more time in you finding the problem. For example, if you, let's say, Ishan, you are doing ABM, you
Yeah.
are much more placed to create an ABM
Yeah.
tool or articulate the
Yeah.
problem than me, because I am kind of miles away from it, right? So that kind of,
Okay.
that
Interesting.
we think that should be one of the prerequisites. The second is
Yeah.
because you are part of
Mm.
that, you have relevant experience, you'll have a network. So you may have spoken to 30, 40, 50 people in the space, formally, informally pitching your product, pitching your idea, yes or no, doesn't really matter. But because you have the network, you are amplifying the problem, right? It's not just
Right.
your or
Right.
my problem, it's the problem of 30, 40, 50 other people. And these are the people you can kind of take your product or a V1 or a beta product to for early validation,
Hmm.
or for product development
Hmm.
roadmaps,
Hmm.
or for pilots, or whatever it is, right? So I think in a logical sequences, part of the industry or able to articulate the problem, having a network of people, and then building a pre, I would, let's say, wait list
Oh.
of people who can actually be real users, right? If you have these three things, it is difficult for a founder to
Yeah.
make a big
Yeah.
glaring
Yeah.
mistake. Mistakes will happen. It's not as if mistakes don't happen, right? But a huge obvious
Uh,
mistake,
wow.
you minimize your chances of doing that.
Hmm.
So I think even if you have these three things and then build out your product, your product is much more quicker in terms
Agreed.
of monetization or adoption or growth,
Absolutely. I think
and you already
I think
have
I can
customers
relate
to
to
sell it
this.
to.
I because we also work with a lot of pre-seed, seed kind of companies. I think where founders, certain founders, not everyone, miss out is on this bit of the journey where that early validation is also important, right? You talk about the product market fit. It's a bigger concept to achieve. That comes in a little later, I feel. But people understand the PMF only, right? They don't see something behind it.
Yes.
Uh, I completely agree. I think if they've worked in that sector before, I think the problem that they identify and the kind of product that they build out is much more useful and solves actual problems, right? And for you also, I can completely understand that becomes a very good criteria for you to judge in the B2B tech software space. And second, that validation bit, I think that is something that I completely agree. And this is also a service that we offer. And this is something that I also try to help the founders understand, right? That nothing can be done. You cannot come in, talk to me, and expect and you are at a pre-seed stage, right? You're not at a seed A or looking at Series A. You're at a pre-seed stage. You still have the product in building, and you cannot come to me and expect me to give you qualified demo calls in the next quarter or so, and that does not happen. That it does not work that way, right? People come to us, we do ABM, right? And they start measuring at the pre-seed level. When I talk about my commercials, they start looking at the CAC, right? The customer acquisition cost. And it is also funny, and funny at moments where they don't understand that the CAC does not make sense because you don't have anything in motion, right? Once you have that, and once you start
It
exactly.
is your product development cost, not
And
your CAC
the
effectively.
second bit that happens is they forget, if they have a product and they can sell, a monthly subscription, whatnot, right? This they forget that they're going to be getting paid month on month. They start measuring with the 1 month revenue that they will come, and the customer acquisition cost. Like, both the things cannot be measured over a period of 1 month or 2 months, right? It has to be a long term cycle that you look at. After a year, you sit down and realize, okay, we first validated a problem, then we looked at when then we started selling it, few pilots. We spent this amount of money, and eventually these are the 10, 12, 15 paying customers that we have, and they've been paying us for the last 6, 8 months, and they'll be paying us for another, let's say, a year or so, and this is what we're going to earn out of it. And that's where you calculate the CAC, and that's where you probably calculate the ROI. So I think this is something that I also personally feel, because we
Agree.
also talk to so many SaaS founders, right? And please tell me if you have had, if you've also, felt this same way. I think this was a common point of discussion that we had when we first met. Also, uh, they understand, the first two criteria they've definitely meet. They're part of the problem. That's where they've come. They have experience. They also have a network. But the growth aspect is something that the founders, at least earlier, started missing, as you mentioned. Because there was a lot of influx of money that was happening. It was not really given that importance at that moment. But things have changed right now, right? Things have completely changed since the last year. So let's get into that, and that is something that I want to hear from you. Could you, for us, for our audience, hopefully a good number of people start watching this when we publish it. Can you first explain the funding winter, the concept of funding winter? What exactly is it? How did this happen? Has it happened before? Because everything, I am not a finance guest, but one thing that I've understood in the field of finance, and this might sound a little noob because I'm calling it finance, but there's always a peak and then a drop and then a peak, and the pattern keeps repeating itself years after years, right? Is it the same? Like, can you talk a little more about that?
Fair. I do agree with your perspective that we are in kind of
Okay.
rough right now. I would not exactly call it a winter, and also agree that it has happened in the past. Right. I think I'm again not too sure about the timelines, but uh, we saw our first high flying
Yeah.
startups in the early
Yeah.
2010s, right, from 2009 10 onwards till 14 15, and then we had
Walmart. Yep.
Flipkart getting acquired by Walmart, so on and so forth. I think that was a time when a lot of investors were looking for cash exits, and the cash
Hmm.
exits did not happen. Either the companies got acquired, or whether uh, maybe some investors got sold to other investors. So a VC exited to another VC, but the other VC could not make money, or founders kind of took some secondaries out, and businesses kind of languished after some point in time, right? So that was a clear phase that people saw in, I'm
Yeah.
not sure the right time, but maybe
Yeah.
somewhere between 15 to 16 is the phase, right? And then I think 17 18, we saw that rough, the funding winter, startups not getting a lot of capital, people being cash trapped. I think some deals, I people have told me that deals
Oh.
happen for 1 crore at 5
Yeah.
crore valuation, right? Unheard of in today's world, right? But these were the deals that were happening. uh, then uh, then
Yeah.
we had this anomaly of COVID and free capital, and because everything being digital and online, a lot of foreign funds could come and invest in India. We have to understand that in the US, a 3 million seed raise or a pre-seed raise is
Yeah.
normal, because you pay one engineer 100 200K. So you have to see how many
Yeah.
engineers or how
Yeah.
many people can I get from that 2 million raise.
Okay.
But the moment you say I did a 2 million pre-seed raise in India, that's 15 crore rupees is generational wealth.
Agreed.
It is very difficult to throw away that kind of money, right? So what happened is a lot of people in India raised at those US VC raises, converted.
Yeah.
If we convert that in
Yeah.
India, I don't think we
Yeah.
pay
Yeah.
2 crore to anybody in early stage. Nobody makes that money, right? And people saw that early stage startups are not getting the same traction. They've raised 2
Hmm.
million, 3 million, 5 million at 10 million, 15 million, 20 million valuation. They're not at that stage now where
Yeah.
you can raise more money. Yes, you can raise more money, but at what valuation? Right?
Right.
You have to, everything reflects today's valuation, today's price. In terms of today's valuation,
Yeah.
is 5 million the right valuation? Is 10 million the right valuation? Nobody knows. So the moment there is uncertainty,
Exactly.
people say,
Right.
yeah, boss, you know what? I don't have to participate. And those companies kind
Right.
of get cut out from the funding tap. Then we have, this is early stage.
Yeah.
Now we look at late
Yeah.
stage. A lot of companies became unicorns in the last 2 3 years, right? Again, I'm not saying what is the right valuation, but do the business fundamentals, the unit economics, reflect that valuation? Again, not really. So either existing investors are putting in more money at the same valuations or at down rounds, nobody
Totally.
knows.
Yeah.
But they're keeping those companies
Yeah.
running so that
Hmm.
they at least salvage something out of their investment, right? But so that is the funding winter, right? If you have been hyper funded,
Yeah.
it is difficult for you to raise a new round at a same or higher valuation. And if you are very well funded in early stage, you have some cash in bank, then you
Right.
have time to kind of earn that valuation and raise the next round. And I'm assuming you will have cash left with you, because it's very
Absolutely.
difficult to spend $5 million as a pre-seed or seed stage company in India, right?
Yeah.
Why I say we are not in the winter, right? We are in a maybe a trough, is because in early stage, people still
Yeah.
have money, people still are investing. The quantum may have changed. What was $1 million pre-seed or a half a
Yeah.
million pre-seed is now
Yeah.
250K to 500K, right? But those deals are still happening. Maybe
Yeah.
the velocity is a bit lower, but there is a lot of capital available for early stage, and a lot of new funds have come
Right.
up in early stage, which will start deploying in the next 1 or 2 years, right? Yes, it has affected people. I'm not saying it has not affected people. A lot of early stage startups are still waiting for capital, but it's
Yeah.
it's 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 a solvable problem in the next 1 or 2 years if you have money, and if you are a new company, then you will need to have, why me, why this product, why this solution, why will customers buy my
Right.
product? If you tick all of these boxes, then capital may be
Agreed.
available,
I
maybe at a
think
slightly lower
this
cost
is
than
this
the
is
last
very
2 years'
interesting the
average.
way you described what is happening right now. I think that sense of discipline has by default come in now, that you need to build a sustainable long-term business that actually gives out return. But again, again, my question, this the same massive inflow will come back uh, in, like, let's say, next 5 years, right? Yeah. This keeps happening. This keeps happening, right? The cycle keeps happening.
Yes,
Awesome. It's been a great conversation. Yeah. Yeah.
yes, yes. No, just think about it, right? In
Yeah.
a funding winter, AI startups are raising 100 million. So then you ask yourself, are we really in a
I
winter,
think
or
yeah.
do
So
people not want to
it's
participate
just
in
not
certain
a
areas?
everybody gets everything kind of a scenario. Now there is obviously money. Money is not going anywhere. There is money to invest. It's just more sensible investments are being made. Keeping in mind, end of the day, the VC, all investors want to make money. That's why they are in the game, right? So this becomes very important in this scenario. So yeah, probably yes. We are not in that winter at the moment. It's a trough, but I think more importantly, I see it as a little positive. It's given a sense of discipline, as I mentioned, some patience also amongst founders, that they don't always have to run after growth. It can be in a
Yeah.
sustainable, in an incremental manner. So definitely everybody loves the bigger numbers, but at the same time you can be careful enough to survive and keep growing incrementally. which is I feel very important as a business. Again, it's a personal opinion, but I feel that is very important. Like, you don't always have to rush in and make billions and be valued at, no, not make billions. If you're making billions, nothing like it. Yeah, 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 absolutely. But not just being
Oh, you
valued
you
at the
you
billion
should
dollar
actually
mark, right? I think
experience.
there are other things more important as a business. Perfect, amazing. I'll take last 2 minutes of your time, Siddharth. As I had promised, I will ask you about how and what you feel about Growth Spree. You've met us for a couple of times. We've had few more conversations. Um, some words about what you feel about Growth Spree. You've also referred us clients. So, first of all, thank you so much for that. Actually, one of the clients that you referred is actually our biggest case study so far. So, yeah. Anything you want
Oh
to
man,
talk about?
cool.
Uh,
Good to hear. So,
yes.
so I think we met via serendipity online, right? Uh, and I think this
Yeah.
coincided with the time where our focus was becoming more B2B. And while our focus was
Hmm.
B2B, we did not know a lot about how do you help our companies grow and get more customers or more revenue. And so that was the opportune time that we met. Again, it was more than important to meet in person. Have that meal, spend about 2 3 hours talking, interacting, talking about life, all of it. The one vibe that we got from you and your co-founder is that we like the intellectual honesty, right? It's something that we really
Yeah.
miss uh, in a lot of conversations that we have. B2B conversations sometimes tend to be very transactional, very one
Hmm.
directional, or oriented towards accomplishing the goal that we have. But we forget that building a business is more of uh, maintaining and building the relationship. I think that's something that we really found of value. And of course, you guys do very well what you do, right? So there's no two doubts about that. um, we're happy to refer clients, as I said, whether they are portfolio companies and non-portfolio companies. At the end of the day, we want companies to succeed, to get more revenue, and I think you guys are the best place to help them
Thank you
than,
so
than
much.
us as
Thank you so much,
investors.
Siddharth, for
So
those
I think
kind
that
words.
that's not going to
Okay,
stop
so that
anytime
is
soon.
the end of the podcast, Siddharth. It was an amazing session. I think a lot of our viewers, including myself, have learned a lot from you. We've got some great insights. I think people who are looking at entrepreneurship, looking at becoming the next founders, or especially in the B2B software space, I think they'll understand a lot of things that probably they miss out on from what you've mentioned today. And thank you so much for explaining the funding winter concept, which is no more. Now I completely agree. It's not a winter. It's actually a trough. It's just the hype on the internet. You keep reading and you just fall into that cave.
Yep.
So yeah, thank you so much for that. I hope you enjoyed as well, and looking forward to more conversations with you in future.
Yes,
Thank you so much, Siddharth. Thank you. Bye bye.
absolutely. The pleasure's all mine.